Hello and welcome to the Meta Unshackled podcast. We are coming to you live from MJ BizCon in Las Vegas. We're very excited to be here. My name is Mitch Chargo. I'm an attorney with the law firm of Hinshaw and Culbertson based in Minneapolis, and I focus my law practice on cannabis. I'm also chair of the law firm's national cannabis practice. And today we have a great panel and a great topic to talk about. The topic is financing your manufacturing center's expansion. And we have industry experts here, Scott Jordan, the founder of Alternative Finance Network. And from Stearns Bank, we have a community development director, Helene Lewis, and a compliance BSA specialist, Randy Shai. And our panel today is going to explore the financial landscape for cannabis manufacturing operations, focusing on funding options, compliance challenges, and strategies for sustainable growth. We have an amazing panel, so let me just quick do a little bit more of a deep dive fast on their background. Helene is as I said, a community development director with Stearns Bank, has a deep knowledge and experience in community development, capital solutions, and business-to-business networking in the cannabis industry. Randy, as I mentioned, is a compliance and BSA specialist with Stearns Bank. He brings a wealth of knowledge and experience in cannabis compliance for banks, particularly with the issues related to the Bank Secrecy Act and related suspicious activity reports and currency transaction reports. And he's uniquely positioned to give his background because not only is he with the bank now, but he was an operator in the past, both in dispensaries, cultivating a grower, and in manufacturing.
Yes.
If I remember. And Scott brings an amazing background of experience, known as the marijuana money man in many circles, founder of the Alternative Finance Network, background in cannabis financing, whether it's financing a cannabis business's real estate, equipment, working capital, or AR, and brings expertise in alternate financing solutions and private capital access for cannabis businesses. So I'm going to dive right in with that background. I'm going to throw out a question for the three of you. What do you see as the most daunting obstacles in the way of cannabis businesses accessing capital through traditional bank solutions?
Typically, in our experience, it's going to be whether they have the assets to back it, because as a bank, we're looking to have assets that back the loans, so secured loans. So with the secured loan, you're going to need to have either equipment or real estate behind it. Of course, with an existing company, that's a little bit easier. For a startup, you may not have necessarily the real estate backing, but if you have identified equipment financing is something that we absolutely do. So if you're looking at that, then we can help with that. So definitely for us, the assets.
I'm going to go backwards a little bit right here, Mitch, and I'm just going to say it's all about the relationships, right? We're at a point where your greatest barrier to accessing the capital is not having an existing relationship with an institution. And if you don't have that, then that's your number one. So I'd say that's the initial.
Scott?
Mostly what we see is that companies do not have their financials together. You need to have a balance sheet that balances. You need to have a P&L that's accurate. And so many times we see cost of goods sold is under reported to make margins look better. So you really need a CFO that's experienced and someone that understands, how to account for the marijuana industry. That's what we see.
Right. So following up on that question, and I'm directing it now very specifically for manufacturing operations, how do those obstacles that you just identified actually impact a cannabis manufacturer's operations?
So like I said, with the assets, as long as you've identified your equipment and you have a good credit and backing, we can definitely take a look at that and see if that's something that we work with. If you're lucky enough to actually be able to purchase or own your building, which doesn't happen very often, a lot of companies are forced to lease it. And it'd be a good idea if you do have to lease to include an option to potentially purchase it in the future if you get there. So building your asset base for business is the best way to help secure financing, because then a bank can look at you and say, yes, you're secured, you're in the game, you have this.
Great. Scott, your take on that?
Yeah. Certainly those things are good. Because we're an alternative finance, we can sometimes help customers that banks cannot, simply because if they have a down payment, if they have other businesses that they can use, we can go ahead and a lot of times get financing for that. Or we can also do a sale leaseback. If you have a building that you'd like to look to purchase that has an appraisal that makes sense, we have people that will buy the building for you and then lease it back to you over a long term, and that'll also help you get into the building, and it'll also help with shoring up and strengthening your balance sheet.
Great. So Helena, I would like to direct this next question to you. First, give us an overview of what a community development director does in the context of banking, and then how did you, in your role, help foster manufacturing growth?
So the entire role of a community development director, officer, infill, whatever word you'd like to after, is to ensure that the entire ecosystem is experiencing a win-win. Okay, that's the bottom line. And so within my role, it is my job to absolutely know your business plan through and through as well as you do. It's my job to understand exactly what your scaling goals are and whether your objectives are actually in place to help you meet those goals. And that is very unique to this particular financial institution. The Stearns Bank prides itself on the agility of having the right staff in the right places to be able to meet each one of those nuanced needs. And so within the cannabis industry specifically, this is growing. It's evolving every single day. So my job is to remain knowledgeable. It is to remain well networked. It is my job to ensure that each one of our clients have access to the most cutting edge knowledge that we have access to.
Amazing. And Randy, I want to direct this question to you. It's a little bit broad, I know that, but I think it'll lead to a good discussion. How do compliance issues, from your perspective, impact a cannabis business's ability to secure financing for its manufacturing operations?
They can be huge, just because if you've had violations with the state, those can make the bank feel less secure about you. So if you have those type of situations, you need to be able to show that they are either in the past or have been resolved moving forward. So if you have notifications from your state regulator, we're probably going to have to follow up on that and look for that. Additional things, that lawsuits from individuals on some of the larger companies, those can be a compliance issue that show up. So making sure that you have all of your ducks in a row to explain what happened, how you're remediating it, how you're moving forward, really help the process out, especially if we run into those.
And from the internal perspective, when these compliance issues arise, how did they usually become visible to you in your role as a BSA officer in the bank?
So typically just through our background research into the company, we can find out that they have pending lawsuits. So a lot of that information is available through different networks that financial institutions, legal firms, and everybody kind of has access to. So once you run that through, you're able to identify, this happened, this happened. A lot of the state actions, they are published. They're not easy to find, but you can find them. So you can just find them online, and the order typically will be able to. So once you've identified those, you have to reach back out and say, hey, what's going on? It's easier if people are open and upfront about it from the beginning.
It's a great point. I was just going to ask you about that, which, your relationship with your banker that you mentioned earlier becomes crucial, right? Because your banker should be your confidant, your partner in this process. And I think transparency in this process is key for a successful financing portfolio to work with the bank, because you're going to see it one way or the other, more than likely.
Yeah, and it's not the end of the relationship. I mean, if you're able to explain it and show how you've remediated, we're able to still move forward with it. So I think that's one thing is people often want to hide information because they think that it'll negatively affect, and it'll negatively affect you more if we have to find out and search it out. So like it becomes,
Exactly.
why was it not shared? So
Exactly. Great. Scott, turning to you for a second now. I'd like to talk more about the alternative financing solutions that are available for cannabis manufacturing enterprises. In particular, your role becomes really important because we all know how hard it is to secure bank financing, especially in states where a bank like Stearns Bank may not have a presence, right? That Stearns in the market, right? But they may not be in a market in a particular state. So would love to hear you expand on what you see are these opportunities for alternative financing solutions and where you think they can take your client.
Sure. So I think that manufacturers oftentimes need working capital, and that's not readily available generally from banks. We have a couple of different programs. We have a program for startups. We call it our Dequity program. It's debt that kind of looks like equity, where if you have a good credit score and income for the last 2 years, we can get you up to about $500,000 per person. And that helps, quite a bit. Some of it will be in the form of revolving lines of credit starting at 0% for 12 to 18 months. And then some of it will be on term loans that are anywhere from 5 to 7 years and anywhere from 9 to 15%. They're unsecured and uncollateralized. So it makes it nice when someone is starting out and doesn't have quite the asset base or the financial strength to get more traditional loans. We can then also help someone that has an existing business that is looking to leverage that business as a guarantor, almost like a parent would co-sign for a loan for their child that just got out of college and doesn't have any work history. It's kind of a technique to be able to help folks as well. And then sometimes we'll also combine that with someone if there is a particularly good pro forma, or they have had they've got shelf space with within key dispensaries. That can be used as well to show that the products that they manufacture, they're actually going to be able to sell through. So what we say is, talk is free. Sit down with us. We'll talk with you and see what we can do creatively to put something together. And we feel like it's always best to use to use debt rather than use equity when you're, starting out, because you can't get the equity back that you have given up.
And I know you've got a really amazing portfolio and history in what you've done. So you've been in this for such a long time, I think 15 years plus now. Give us a couple of examples from your past that you can elicit for our audience an understanding of the process and what you can do to be successful in it.
Sure. So one of the first large deals that we did actually was with the folks next door, Weed Maps. When they were a small company, they were looking to give up 10% of the company for a couple $1 million. And I convinced the ownership at the time that it wasn't going to be as good as utilizing debt because, again, once you give it up, you can't get it back. And so as a result, what we did was we got them the money they needed. When they sold out, that 10% equity that we saved them was worth $150 million.
Wow.
So,
Unbelievable.
quite a good decision in hindsight that they were, happy, in the end, because it ended up being a happy ending for them, not having to give up equity, at that time.
And I'm sure from your experience too, the process of giving up equity not only is in numbers, percentages, but it's also picking your partners wisely, right? You've got
Yes.
that issue as well, which always comes into play. So in following up on one more direct question for you, what practical advice can you give to manufacturers on aligning their funding strategies with business goals to achieve long-term success in their operations?
I think a plan, one of the things that we don't see very often is a good plan with a good pro forma. And the pro forma needs to include a balance sheet, because unless you know how you're going to get the capital that you're looking for, it's like driving without a map. You got to go ahead and,
Exactly.
and have a destination and know how you're going to get there and how you're going to achieve that. And we often see plans without adequate pro formas. So it's best to hire someone if you don't have the ability to do that yourself. Hire someone to be able to come up with not only sales forecast and reasons for it, and don't have a hockey stick going up, because it's rare that you're able to continually to meet the revenue goals in markets where we know traditionally prices decline anywhere from 20 to 35% a year, depending on where they're at. So I would say pro formas are important, business plan is important, and understand the contingencies as well, and what are the important metrics in order to help you get there.
Great. I'd like to ask Randy and Helene to jump on to that topic from your perspectives, what you can add, what kind of advice you can give to your bank customers on aligning their funding strategies with business goals to achieve their success.
I'd say, in addition, just pick your partners wisely. Do not just align with somebody because they are a friend or maybe a colleague of a colleague and they look good on paper. Really vet who it is you're working with. Do their values and their company align with your own company values, and continue moving forward in a way that you are meeting your objectives, and continuing to communicate those relationships is imperative.
I would say use your resources. A lot of times people assume there's not nearly as much resource or consulting in the cannabis industry, but that's just not true. There's a lot of resources through the legal industry. Even if you don't end up banking with a bank, you can still, as Scott said, talk is free. So come talk with a bank, come get some ideas, find an accountant who's very used to cannabis banking. So utilize the people that are used to it, that have been there, that have experience, to gain your own experience. So don't learn the lessons that other people have already had to learn. Just ask somebody else to get a head start in it. So there's a lot of resources out there that I don't think people utilize as much as they could.
That's great. Well, I want to thank our three panelists today for being here. This has been a great episode. And thank Mita Unshackled and the podcast for having us all. Scott, tell us, where can we learn more information about alternative financing and you?
Come to my website, which is www.alternativefinancenetwork.com, or reach out to me on LinkedIn, Scott Jordan, Jordan, and put cannabis beside it. There's one guy that was on Shark Tank that's a little bit more famous than I am with the same name. So
Great.
we'd love to talk with you guys.
Great. Randy, where can we learn more about you and Stearns Bank?
So, of course, stearnsbank.com. We have information on our cannabis banking, the type of lending we do. You can initiate the process there. You can come stop by the Mita booth and initiate the process with us and talk with us. And you can also find all of us on LinkedIn.
Great. Helene, same answer or any place
Same
else?
answer.
Okay, great. Well, thank you all, and thank you for Mita Unshackled for having us, and it's been a pleasure to be here.
Thank you for having us.
Thank you.
Thank you.